So how to prepare for a tax investigation. I don't think anybody can ever be prepared for a tax investigation, although there may be signs that give rise to the fact that you're going to be subject to a more in-depth investigation. For example, you may have a PAYE or audit on a business or VAT inspection, and you're aware that there's a larger irregularity. Those are sort of signs that you may be investigated. I'm going to talk very briefly about Code of Practice 9 investigations here, because that gives us a framework to put the context of how to prepare in place. The first thing to do is that you will get a letter, and that letter will be very official. It will talk about the fact that you have a period of 60 days to make an initial disclosure, which is not a long time when you know what you have to do for initial disclosure, which puts a lot of pressure on. It also comes across as very official, and that letter is very official because it is saying you have the option now to avoid prosecution, and therefore there's an instant panic with most people. And it's very easy to say don't panic. A little bit of panic, a little bit of fear is good because it will help you act quickly, take it seriously, but you've got to do that calmly. And firstly, it would be inappropriate for you to contact HMRC. So you get this letter through, you may want to contact and confess your innocence or confess everything to them if you've got irregularities. That would be an inappropriate approach, because if you say the wrong thing, you may actually make an omission or make a misrepresentation, and that could lead to a separate act which you can be prosecuted for. So don't contact HMRC. You need to talk to a specialist. Now, I would say that because I am one, but we've seen enough cases that have been managed by accountants or solicitors that don't have experience of Code of Practice 9 and don't know how HMRC work, and they're not handled very carefully. So look for someone that you get on with, that you can trust to do the work for you, that shows you a level of experience and expertise in dealing and handling with HMRC investigations. You want someone who has that experience and can give you a proven track record of what they've done. This is because it manages your risk. It also manages the risk to advisors. If an advisor is helping you and they actually advise you to leave something out, not only are you put at risk, but the advisor is also put at risk. So get a specialist in to help you. Do not destroy records. Whatever you do, do not destroy records. This is another offence that you can get caught for, and HMRC do have ways of finding out. Those records may actually help mitigate your liability if there is significant liabilities. There are often ways of reducing them by having a specialist review the records and find different ways of presenting that to HMRC and running different arguments of what might be allowable deduction or what the circumstances are that give rise to a tax liability. It may be that because of information provided to your specialist advisor, that they are able to argue that the act is not deliberate, it's non-deliberate, and therefore out of time to be taxed. So there are a number of things that can be done to reduce your liability, so records are important to do that. It's really important that you obtain primary records early on. 60 days to do initial disclosure is not long, and it's unlikely you'll be able to get all primary information stretching back over a 20-year period, which is what happens under Code of Practice 9. So you will have to obtain bank statements, which can normally be obtained for up to 10 years, sometimes longer. If you're in your possession, then you should release them to your advisor, so that at least can review them. Having the information will help put your position together and make a full and complete disclosure, bearing in mind that HMRC will also be able to obtain similar information if they haven't already. It's likely they have. And often taxpayers say, well, why have HMRC got this information? Why aren't they telling me what they want to hear? And that's because the process of Comp 9 is that you go forward with making your disclosure. You've got to work with your advisor. They need to understand the process equally in order to make sure you embrace it and avoid either prosecution for under the Common Law of Cheat or the Theft Act 1960, and also not to make an omission or misrepresentation, which is a separate offence that you can be prosecuted for. So you've got to keep calm, you've got to get your information together, you've got to be prepared should you come to meet HMRC, which might mean that you have to work with your specialist advisor in doing mock interviews or mock interrogations with HMRC and preparing your answers for certain difficult questions that may inevitably be held. This will mean that you're cooperating with the process and you'll be able to mitigate the exposure, both potentially on tax but certainly on penalties. So be cooperative. Your advisor or your specialist advisor will be able to guide you to this regard and give you a framework to work within, and they'll also be able to manage you and your representations with HMRC in order to better protect you either from paying too much tax, or even from prosecution.